All right, buckle up, everyone, because today we're diving headfirst into Axon Enterprise. You know, the company behind those tasers and body cams you see everywhere these days. But hold on, this isn't just about cool gadgets. We're going deep, deep into their business model, their financials, the whole 9 yards, to help you figure out if their stock deserves a spot in your portfolio. We've got a stack of research here, and trust me, we've pulled out the juiciest bits. You're going to learn about the potential, the risks, everything you need to make a smart decision.
You hit the nail on the head when you said business model. One of the most fascinating things about Axon is they haven't just stopped at selling individual products. They've built this entire ecosystem that police departments depend on. It's made them a real powerhouse in law enforcement tech.
Okay, an ecosystem. I like the sound of that, but break it down for me. How does that translate into, a solid investment? What are we really talking about here?
Well, let's start with the products themselves. You've got the TASER 10, their latest non-lethal weapon, and then there's the Axon Body 4 camera. Get this. It can actually stream live footage. We're talking cutting-edge tech here. And the real kicker, all of this feeds into their cloud-based evidence management software, evidence.com.
Live footage. Whoa, that's
Yeah.
intense. But I'm still trying to wrap my head around this ecosystem thing. Paint me a picture. How does it all come together?
Think of it like this. A police department invests in the tasers, they get the body cameras, and then they sign up for evidence.com to manage all the data from those devices. It becomes this incredibly integrated system. The thing is, once they're in, it's really tough and expensive to switch over to a competitor.
Oh, I see. So they're kind of locked in.
Yeah,
That sounds like a pretty sweet deal for Axon from a business perspective, right?
exactly. And for those of us looking at this from an investment angle, it means a more predictable revenue stream for Axon. Those recurring subscriptions, that's gold when you're analyzing a company's financials.
That locked-in customer base, that's something that really jumped out at me in the research. It's like they've built a fortress around their business, right?
Yeah,
Making it near impossible for competitors to get a foothold.
you got it. It's like a moat around their castle.
Mhm.
And that moat is a huge factor when you're trying to figure out a company's long-term potential. That's a serious competitive edge.
Okay, I'm starting to see why everyone's buzzing about Axon.
Yeah.
But let's get down to the nitty-gritty here, the financials. What's a bottom line look like for them? Are they actually making money?
Here's the good news. They've been on a roll with revenue growth. We're talking double-digit increases year after year. That's nothing to sneeze at. And get this, they've recently become profitable, which is a big sign of a healthy, sustainable
Yep,
business.
it's music to my ears. But I'm also curious about their global game plan. They're already huge in the US, but what about the rest of the world? Are they expanding?
Absolutely. They're making some major moves internationally, especially in places like Canada, Europe, and Australia. And here's the interesting part. A lot of law enforcement agencies in those areas are, well, a bit behind the times when it comes to tech. Axon's got a real chance to swoop in and be the first one there, the pioneer.
Yeah, that first mover advantage, that could be a game changer for them. It's like having a head start in a marathon.
Exactly, but hold your horses because it's not all rainbows and sunshine. There are some financial details that warrant a closer look.
All right, let's not sugarcoat it. What are the
Awesome.
potential downsides here? What should investors be wary of?
One thing that stands out is their stock-based compensation for employees. Don't get me wrong, it's a common practice, especially in the tech world, but it's something investors need to understand. It can potentially dilute the value of shares.
Okay, so how does that work exactly? I mean, I get stock options and all, but why does it dilute the value for existing shareholders?
It's a little technical, but essentially, when a company issues more shares to employees as part of their compensation, it increases the total number of shares out there. And that, in effect, can shrink the ownership percentage of the existing shareholders, which might affect the value of their holdings.
So it's something to keep an eye on, not necessarily a deal breaker, but definitely a factor in the equation.
Right. It's all about being informed and understanding the potential impact on your investment.
Okay, so far we've covered Axon's dominance in the market, their innovative product lineup, those impressive financials, and their global ambitions.
Right.
What's next on our agenda for this deep dive?
Let's shift gears and talk about one of Axon's biggest strengths, their dedication to research and development. These guys are constantly innovating, coming up with new tech, like the TASER 10 and Axon Body 4 we mentioned earlier. This commitment to staying ahead of the game, that's something investors should really appreciate.
So they're not just sitting back counting their cash, they're actively investing in the future.
Exactly, and their focus on areas like AI and cloud computing, it tells me they're on the right track for long-term growth. But it's important to be realistic. Even with all this innovation, there are still some inherent risks that come with investing in Axon.
Okay, let's talk about those risks. Every investment has some level of risk, right? So what are we looking at with Axon specifically?
One concern is their valuation. Currently, their stock is priced pretty high compared to other companies in similar industries. That doesn't automatically mean it's a bad thing, but it does mean they need to consistently exceed expectations to justify that price tag.
So the pressure is on. They've got a lot to prove to keep investors happy.
That's right. And then there's the issue of negative free cash flow. Now, even though they're profitable, they're still spending more money than they're bringing in at the moment. A lot of that is due to the stock-based compensation we discussed, as well as their significant investments in R&D and expanding into those new markets.
Yeah, that negative free cash flow does make me a little uneasy. I mean, how long can they keep spending more than they're earning?
It's a valid concern and something we definitely need to explore further. It's a gamble, betting that this aggressive spending will lead to even bigger market dominance down the line. But it's a risk that needs careful consideration.
Okay, so we've got this interesting dynamic here. Axon's got incredible potential, but there are some real financial risks involved. It's a lot to process.
It is, and that's exactly why it's so crucial for any potential investor to really understand the full picture before jumping in.
Absolutely. So what else do we need to cover to make sure our listeners are fully informed before making a decision about Axon?
We need to look at the competitive landscape. Axon might be the top dog in the US, but things get a bit more complicated when you look at the international market. There are other companies out there trying to grab a piece of the pie, especially as law enforcement agencies around the world start to modernize and catch up on technology.
So the competition's heating up. What does that mean for Axon? Are they in danger of losing their leading position?
Not necessarily, but it's definitely something to keep an eye on. Increased competition could trigger price wars, which could squeeze their profit margins. It really highlights how important it is for them to keep innovating and adapt to the changing market.
All right, so competition is one factor to consider. What else could throw a wrench in Axon's plans?
We can't forget about the wild card regulatory risks. Remember, they're handling sensitive police data, which puts them right in the crosshairs of data privacy laws and government policies. Any changes in these areas could have a major impact on their business, for better or worse.
That's a really good point. Regulatory risks often fly under the radar, but they can make or break a company, especially in Axon's case.
You said it. With a company operating in such a sensitive and regulated industry, it's something investors absolutely cannot ignore.
So to recap, we've covered Axon's strengths, their weaknesses, the opportunities in front of them, and the threats they face. It's a complex picture, but hopefully our listeners are starting to grasp what this company's all about.
I think we've given our listeners a solid foundation to build on. We've highlighted the key things they need to consider when evaluating Axon as a potential investment.
Great. So where do we go from here? What's next on our deep dive agenda?
Now that we've laid out the fundamentals, it's time to really dive into what all of this means for you, the investor. In part 2, we'll be exploring those key takeaways, discussing the level of risk involved, and analyzing whether Axon truly fits your individual investment goals. Stay tuned.
Welcome back, everyone. So we just spent some time unpacking everything. Axon Enterprise, their super cool tech, their strong financials, and don't forget those global expansion plans. But as with any investment, there's always, two sides to every coin, right? There's got to be some risk.
And that's exactly what we're going to tackle right now, the risk. It all comes down to you, the investor, and how much risk you're actually comfortable with. Axon, well, it's considered a growth stock, meaning its value is tied to future potential, what they could become, rather than just their current earnings. It's like betting on where the company's headed, not necessarily where they are right now.
So it's not like one of those set it and forget it investments. You're not just going to buy it and watch it grow without any effort.
Not quite. It's more like you're putting your faith in Axon, believing that they'll innovating, grab even more market share, and ultimately blow past those sky-high expectations set by their current valuation.
Okay, so big potential rewards, but also the possibility they might stumble. We talked about the competition heating up overseas and those regulatory hurdles. Those are factors too, right?
Right. And even if Axon plays their cards perfectly, those growth stocks, they tend to be a bit more volatile than, let's say, those well-established blue chip companies. They can swing up and down a lot more dramatically.
So not for the faint of heart, huh? Sounds like an investment for someone who's in it for the long haul, someone who can handle the ups and downs, someone who's not going to panic when things get a little bumpy.
Exactly. If you're just looking to make a quick buck, or if you need that money back in the short term, then Axon's probably not the right fit for you.
But what about those financial concerns we touched on earlier, that negative free cash flow, for example? Should that be like a major red flag, a deal breaker for people thinking about investing?
It's definitely a factor to consider, no doubt about it, but keep in mind, Axon is in full-on growth mode. They're prioritizing investments in the future, things like R&D and expansion, over making a quick profit.
So they're spending money to make money. Is that what you're saying?
In a way, yes, it's a classic growth strategy, but you have to ask yourself, do you believe in their strategy? Do you think those investments are going to pay off down the road? Are they going to generate positive cash flow in the future?
Wow, that's a tough one. It's like trying to predict the future, isn't it?
It is, and that's precisely why doing your own research is so important. Don't just take our word for it. Dig deeper. Look into their financial statements. Read those analyst reports. Stay up to date on industry news. You gotta form your own educated opinion.
Okay, so research is key. Got it. But beyond the numbers, what else should investors think about when considering Axon? What about the big picture?
Yeah, exactly. The big picture. How do you feel about the future of law enforcement technology in general? Do you believe in Axon's vision? And think about this. Are you okay with the ethical implications of investing in a company that provides tools, well, tools that are used by law enforcement?
Wow, those are some really important questions. It's not just about the potential financial gains. It's about aligning your investments with your personal values, your beliefs.
Absolutely. Investing is about more than just making a buck. It's about supporting companies and industries that you believe in that resonate with you.
All right, so let's say I've done my homework, I've weighed the risks, and I've decided, you know what, Axon's a good fit for me. It aligns with my investment style, my values. What's next? What are the steps I need to take to actually invest in this company?
Well, there are a few different paths you can take, each with its own pros and cons. We'll break those down in detail in the final part of our deep dive. We'll explore those investment strategies, talk about diversifying your portfolio, and really make sure you understand how Axon fits into your overall financial goals.
Okay, so we've explored a ton of information about Axon Enterprise, their cutting-edge technology, their financial performance, those risks we talked about, and even the bigger picture ethical questions. But let's get down to the practical stuff now. Let's say I'm convinced, I believe in Axon, I'm ready to invest. How do I actually make that happen?
Well, I'm assuming you've got the basics of trading down, right? So the most straightforward way is buying Axon stock directly through a brokerage account. But, there are some other approaches, some more nuanced strategies that might actually be a better fit for your overall investment portfolio.
Nuance, I like it. Tell me more. What are these other ways to get a piece of the Axon action?
Have you ever looked into exchange-traded funds or ETFs?
But ETFs, yeah, I've heard of those.
Well, some ETFs focus specifically on the tech sector, or even more specialized ones that target companies involved in cybersecurity or, you guessed it, law enforcement technology.
So instead of putting all my eggs in the Axon basket directly, I could spread the risk a bit by investing in an ETF that holds Axon along with other companies in that same industry.
Exactly. Diversification, remember, that's key, especially with growth stocks like Axon. Those can be a little more volatile, those ETFs. They can help you smooth out those ups and downs a bit, make the ride a little less bumpy.
That's smart. Okay, so whether I choose individual stocks or ETFs, how much of my portfolio should I actually allocate to Axon? Is there a rule of thumb, a certain percentage that makes sense?
Unfortunately, there's no magic formula, no one-size-fits-all answer. It all boils down to your personal risk tolerance, how much risk you're comfortable with, and your investment goals, what you're hoping to achieve. If you're younger, you've got more time, a longer time horizon, then you might feel okay with a larger portion of your portfolio in growth stocks like Axon.
Right, because they have more time to bounce back if things go south.
Exactly. But on the other hand, if you're nearing retirement, you probably want to play it a bit safer.
Yeah, a smaller allocation would probably be wiser in that case.
Exactly. It's all about finding that sweet spot, that perfect balance for your individual situation.
Speaking of balance, this whole conversation about Axon has been like a balancing act, weighing their potential against those risks. It makes me wonder, what's a realistic expectation for returns? If I invest in Axon, what kind of return can I reasonably hope for?
That's a great question. It's crucial to keep your expectations in check. Axon's got a lot going for it. They've shown some impressive growth. There's that exciting potential we talked about. But remember, investing is a marathon, not a sprint. It's a long game.
Patience, right. You always hear that in the investing world, patience is key.
Absolutely. And never forget, past performance doesn't guarantee future results.
No guarantees in life, I guess, especially in the stock market.
Yeah.
But let's revisit those financial red flags we discussed earlier, like that high valuation and the negative free cash flow. What should potential investors be thinking about with those things? Should they be worried?
Those are definitely important factors to consider, no doubt about it. But again, remember, Axon is in full-on growth mode. Their priority is investing in the future, not necessarily pumping up short-term profits. If their strategy pans out, then that valuation could be justified down the road, and that negative free cash flow could very well turn positive.
So it all hinges on potential, but also recognizing that potential doesn't always equal success, right?
Exactly. You got to weigh those factors carefully, do your homework, and if you're not comfortable with the level of risk, then don't be afraid to walk away.
This has been incredibly informative. But before we wrap things up, let's circle back to that competitive landscape and those regulatory risks. Any parting thoughts on how those might play out?
Competition, it's just a fact of life in any industry, and especially in a field as dynamic as law enforcement technology. Axon's got to stay ahead of the game. They need to constantly innovate, adapt, and evolve.
And what about those regulations? Seems like those could change at any time, couldn't they?
They absolutely could, and that uncertainty, well, that just adds another layer of complexity to the whole equation. Investors need to stay informed, stay on top of any changes to data privacy laws or government policies that could affect Axon's business.
All right, so the bottom line is, do your research, weigh the risks and the potential rewards, and then make a decision that you're comfortable with, a decision that aligns with your own personal investment goals and your risk tolerance. That's what it all comes down to, right?
Couldn't have said it better myself. And remember, investing, it's a journey. It's not a destination. Enjoy the ride.
Well said. And that brings us to the end of our deep dive into Axon Enterprise. We hope you found this exploration informative, that it's giving you the tools and knowledge you need to make smart decisions about your investments. Until next time, happy investing, everyone.